In-depth analysis of the TSLY ETF, a comprehensive guide. Attention investors. Are you searching for a high-yield ETF that combines explosive growth potential with monthly income? Look no further than the YieldMax TSLA Option Income Strategy ETF, TSLY, a game-changing fund designed to capitalize on the volatility of Tesla, one of the most talked-about stocks in the market. Whether you're a passive income seeker, a Tesla bull, or simply exploring innovative investment strategies, this video is your ultimate guide to understanding TSLY. We'll dive deep into its history, management, investment strategy, risk level, dividend yield, payout frequency, current price, and health score. Plus, we'll analyze whether TSLY's dividend yield has increased or decreased since inception, and explore its growth trajectory since its launch. By the end of this video, you'll know if TSLY deserves a spot in your portfolio. Disclaimer. This video is for informational purposes only and is not financial advice. Always consult with a licensed financial advisor before making any investment decisions. The history of TSLY, inception and background. The YieldMax TSLA Option Income Strategy ETF, TSLY, was launched about 2 years ago by YieldMax ETFs, a subsidiary of Tidal Financial Group. The fund was designed to provide investors with a unique way to gain exposure to Tesla, Inc., TSLA, one of the most volatile and high-growth stocks in the market, while generating monthly income through an options-based strategy. Why TSLY was created? Tesla has been a polarizing stock, known for its dramatic price swings and high volatility. While this volatility can be intimidating for some investors, it also presents opportunities for generating income through options trading. TSLY was created to capitalize on this volatility by employing a covered call strategy on Tesla stock. This strategy allows investors to potentially earn high monthly dividends while mitigating some of the risks associated with direct ownership of Tesla shares. Growth since inception. Since its launch, TSLY has experienced significant growth in assets under management, AUM. As of March 20, 2025, the fund has grown to over $673 million in AUM, a testament to its popularity among income-seeking investors. The fund's ability to generate high monthly dividends has been a key driver of its growth, attracting both retail and institutional investors. Management and investment strategy. TSLY is managed by YieldMax ETFs, a relatively new player in the ETF space that specializes in creating income-generating funds using options strategies. The team behind YieldMax has extensive experience in options trading and portfolio management, which is crucial for successfully executing the fund's strategy. Investment strategy. TSLY employs a covered call strategy on Tesla stock. Here's how it works. Ownership of Tesla shares. The fund holds a portfolio of Tesla shares, providing exposure to the stock's price movements. Selling call options. TSLY sells call options on Tesla stock, generating premium income. These call options give the buyer the right to purchase Tesla shares at a predetermined price, strike price, within a specific time frame. Income generation. The premiums received from selling call options are distributed to shareholders as monthly dividends. Key benefits of the strategy. High monthly income. The primary goal of TSLY is to generate high monthly income for investors, making it an attractive option for those seeking regular cash flow. Reduced volatility. By selling call options, the fund can partially offset the volatility of Tesla's stock price, providing a smoother investment experience compared to owning Tesla shares directly. Exposure to Tesla. Investors gain exposure to Tesla's growth potential without having to directly own the stock, which can be more capital-intensive and risky. Risk level. Understanding the risks. While TSLY offers attractive income potential, it's important to understand the risks associated with the fund. Market risk. TSLY is heavily exposed to Tesla's stock price movements. If Tesla's stock price declines significantly, the value of the fund's holdings will also decrease. Options risk. The fund's strategy involves selling call options, which can limit the upside potential of Tesla's stock. If Tesla's stock price rises above the strike price of the call options, the fund may miss out on some of the gains. Dividend risk. The fund's high dividend yield is not guaranteed and can fluctuate based on the premiums received from selling call options. In periods of low volatility, the premiums may decrease, leading to lower dividends. Liquidity risk. While TSLY is traded on major exchanges, its liquidity may be lower compared to more established ETFs. This could result in wider bid-ask spreads and higher trading costs. Risk level assessment. On a risk scale of 1 to 10, with 1 being the lowest risk and 10 being the highest, TSLY would likely fall around a 7. This is due to its concentrated exposure to Tesla and the use of options, which can amplify both gains and losses. Dividend yield and payout frequency. Dividend yield. One of the most attractive features of TSLY is its high dividend yield. As of March 2025, the fund boasts a dividend yield of approximately 122%. This is significantly higher than the average dividend yield of traditional equity ETFs, which typically range between 6% and 12%. Dividend yield since inception. Since its inception, TSLY's dividend yield has shown consistent growth. In the first few months after launch, the fund's yield was around 40%, but it has since increased to 60% due to higher premiums from selling call options and the fund's growing AUM. This increase in yield has been a major draw for income-seeking investors. Payout frequency. TSLY pays dividends on a monthly basis, making it an excellent choice for investors who rely on regular income. The monthly payouts are a result of the fund's option strategy, which generates consistent premium income. Current price and health score. Current price. As of March 27, 2025, TSLY is trading at approximately $8.68 per share. The fund's price has experienced some volatility, reflecting the underlying volatility of Tesla's stock price. However, the fund's primary focus is on generating income rather than capital appreciation, so price fluctuations are less of a concern for income-focused investors. Health score. To assess the overall health of TSLY, we can consider several factors. AUM growth. The fund has grown significantly since its inception, indicating strong investor interest and confidence in the strategy. Dividend consistency. TSLY has consistently paid high monthly dividends, which is a positive sign for income-seeking investors. Performance relative to Tesla. While TSLY's price may not always track Tesla's stock price due to the option strategy, the fund has generally performed well in generating income. Expense ratio. TSLY has an expense ratio of 0.99%, which is relatively high compared to traditional ETFs, but is justified by the active management and options trading involved. Based on these factors, we can assign TSLY a health score of 8 out of 10. The fund is in good health, with strong AUM growth, consistent dividends, and a clear investment strategy. However, the high expense ratio and reliance on Tesla's stock price are factors to consider. Growth since inception. Since its launch in December 2022, TSLY has experienced rapid growth in AUM, reaching over $673 million by March 2025. This growth is a testament to the fund's ability to attract income-seeking investors, particularly those who are bullish on Tesla but want to mitigate some of the risks associated with direct ownership. Price performance. While TSLY's primary focus is on generating income, its price performance has also been noteworthy. The fund's price has shown moderate growth since inception, reflecting the underlying strength of Tesla's stock and the success of the option strategy. Investor interest. TSLY has garnered significant interest from both retail and institutional investors. The fund's unique strategy and high dividend yield have made it a popular choice for those looking to generate income in a low interest rate environment. Is TSLY right for you? Who should consider TSLY? Income-seeking investors. If you're looking for a high-yield investment that pays monthly dividends, TSLY could be a good fit. Tesla bulls. If you're bullish on Tesla but want to mitigate some of the risks associated with direct ownership, TSLY offers a way to gain exposure while generating income. Option-savvy investors. If you understand the risks and rewards of options trading, TSLY's strategy may align with your investment goals. Who should avoid TSLY? Risk-averse investors. If you're not comfortable with the risks associated with options trading and concentrated exposure to a single stock, TSLY may not be suitable for you. Long-term growth investors. If your primary goal is long-term capital appreciation, TSLY's focus on income generation may not align with your objectives. Final thoughts. The YieldMax TSLA Option Income Strategy ETF, TSLY, is a unique and innovative fund that offers investors a way to generate high monthly income while gaining exposure to Tesla's stock. With its covered call strategy, TSLY has been able to deliver consistent dividends, making it an attractive option for income-seeking investors. The TSLY ETF currently yields 122%, a level that's unlikely to be sustainable in most cases. However, in this case, due to TSLA's high implied volatility, I see good odds for the high income to persist in the near future. However, it's important to remember that TSLY is not without risks. The fund's concentrated exposure to Tesla and its use of options trading can lead to significant volatility. As always, it's crucial to conduct your own research and consult with a financial advisor before making any investment decisions. Disclaimer. This video is for informational purposes only and does not constitute financial advice. The content provided is based on publicly available information and is subject to change. Always do your own due diligence before investing.